This is Scott Becker with the Becker Private Equity and Business Podcast. This is a quick market update, 6 key points and stats. Thank you for listening. First, the markets point mildly down today, mostly on concern about whether Congress and the White House will be able to figure out this debt ceiling issue, something that's got to be solved, and hopefully it's solved with some control over the budget, not just let the budgets keep on going up. As we talk about constantly, debt kills. It kills countries, it kills companies, it kills families, debt kills. We've got to get that debt under control. This doesn't mean that the crazies on the right can act too crazy, but what they're doing is necessary to find some balance between debt and spending. So that's one point. But the markets are down a little bit this morning based on concerns about them being able to find some middle ground in this. Second, it will be the second point in this is, it will be a real feather in Joe Biden's cap if he could sort of get his party in order and find a middle ground with these people. It'll give people a lot more confidence that somehow there's an ability between the right and the left to build consensus on different important issues. And that would go a long way, I think, towards helping Biden get reelected next year. It'll help these right-wing guys themselves get reelected, but I also think it would be a great coup for Biden to find a middle ground and show that there is some flexibility in the White House with the other side. We'll see how that goes. Second, the markets yesterday. Yesterday, the markets had a solid day. The NASDAQ was up 0.66%, the S&P up 0.30%, the Dow up 0.414%. Third, the 10-year Treasury yield, 3.5%, holding about steady, down a little bit year to date, about 40 basis points, but holding steady today. Again, long term, there's a bet that sooner or later the U.S. will roll into recession. Thus, the long-term debt is yielding a lot less than the short-term debt. Fourth, Bitcoin right about $27,000, still about 60+% year to date, down a little bit from its highs of 31,000, but still holding steady again. For the life of me, I don't really understand it, the investing in it. Oil right about $71 a barrel, multiple different signals on oil. Some signals saying at the end of the day we're going to need more oil. Others saying there's a slowdown, but the slowdown is what's caused us to get down to $71 a barrel. We'll see how it looks in the long run. So we've got, so far, markets a little bit down today on debt ceiling talks. Markets up yesterday. The 10-year Treasury yield 3.5%. Bitcoin $27,000. Oil rate about $71 a barrel. And finally, 6, the 1-year Treasury peaking back up above 4.8%. Again, becoming quite attractive for savers, actually. For a very long time this past year, we're living in the world there is no alternative, meaning there is no alternative to U.S. public equities. And now suddenly, Treasuries look attractive again at 4.8%. You're still doing about now the same as inflation, quite frankly, after taxes are doing worse than inflation, but it starts to feel like a safer place where there's at least some yield. Again, those are 6 quick points this morning. Thank you for listening to us on the Becker Private Equity and Business Podcast. Thank you very, very much.